Good morning. It is the 2nd of January. Gosh, crazy. Markets are opening up today. I'm just going to give a quick Bitcoin update with some key metrics coming in as we are now fully entering Q1 of 2025 with everything coming back next week, effectively with liquidity and everything else. At least that's the expectation. So to move forward right now, we've seen a massive change in the last 24 hours of the long short ratio, which is good. We want to see this hold. So we went from about 2 to 1 long to short. Again, if they're 66% long, it likely means we have more pain to the downside. So the fact that we started gaining some levels and it reversed very quickly is good. We're back under 60%. We want to gain levels and we want to see the increase in short positions. So this is good. It just means that as price goes up, retail obviously losing, trades the opposite direction. So that's nice to see. Funding rate slightly bearish. Nothing crazy, nothing major outliers effectively across the board. It seems like normal liquidity funding rates. And then on the heat map itself, so here's the one thing that kind of stands out if we're going to do one last little final hurrah to the downside, because the local structure does look pretty promising. The problem is we haven't gained back the important thing, which is back up here at 99.1, getting back above this little hump, which opens up the short liquidity above us. The problem that we have is if we lose 93K now, this does several things. It loses the weekly open, the couple daily opens, the local demand, and it probably means we sweep into that really painful long liquidity below us. So I would say that 93K is the cutoff. If we lose that, we're going to do one final sweep into the lows. And I think that'll be the promise, like the last one. It could be in right now. It actually looks very aggressive and strong. We just want to see that aggressive shorting coming in very, very quickly. So with that being said, going over to the charts themselves, the big thing here is we're gaining levels. We're back above the previous monthly open December. This is looking strong and promising. We had a failure of it going into Tuesday, before, New Year's Eve. If we see that failure again, we want to see a move back down towards the daily open, potentially back towards the yearly to sweep this demand. Closing underneath the yearly open, getting under 93.5, losing 93K in general starts to look really nasty, and it looks like we want to then do the last little hurrah to the downside. Now, I don't think that we're going to get this full push down to 86. We can if we have another flush to the downside, but the buyback is going to be the most important thing. If there's a strong buyback, if we do another major dump, the buyback's key, and you want to get back above previous lows, back above the yearly open as quickly as possible. Another thing just to mention, since it is Thursday today, Friday, and then next week, we're expecting the markets to go back to effectively normal. We have something called the overnight reverse repurchase agreements. Effectively, I wrote an article on X on this already and on TradingView. The number one thing that we want to see here is that going into the end of the week today, when the data starts coming out, and going into early next week, a massive reduction in these the total on these treasury securities sold. So right now the number's at 473 billion. We want to see this massively come off, and even by next week getting as low as below 100 billion, right? Back below the lows that we were seeing before the market started reversing. So this is typical. This is a quarterly phenomenon that happens. The spikes that occur, they occur at every single Q junction for the most part. And then if it's the bullish market's going to continue, you see an immediate reduction and a nuke back off the cliff. That's what we want to see. If we see stagnation and we see higher lows being put in, expect some potential more pain coming in. And this massive spike is almost directly in relation to the Federal Reserve interest rate decision. Not so much that they cut rates, but the fact that they lowered their number of prospective cuts from 4 to 2 for next year. So again, it's gonna be pretty interesting with the data. I would expect, which is still the likely scenario, that this comes off really dramatically and drastically, which just means liquidity coming back in and a full send continuation. So that's it. Catch you tomorrow. Peace.